This is your LMAX exchange technical update for Tuesday, September 19th, 2017. Euro dollar. So the euro has been trading in an uptrend in 2017, but is stalled out by 2017 highs recently at 20.93. At this point, we need to see a breakdown below 118.24 or back above 120.93 for clear directional insight. If the market does break down below 118.24, it would expose a drop to 116.63 further down, below which could expose a break back towards the psychological barrier at 115. If, on the other hand, the market is unable to establish below 118.24, the uptrend remains firmly intact for a push up beyond 120.93 and towards the next measured move extension in the 123 area further up. Sterling dollar. So cable has seen some setbacks after the market rallied up and exploded to a fresh 2017 high beyond some key resistance at 135. At this point, technical studies have been a little bit extended to the top side, and so it wouldn't be surprising to see this market correct a little bit more, and we could see some choppy consolidation that ultimately sees the market between the 130 to 135 area in the weeks ahead. Overall, though, setbacks should now be very well supported on a medium-term basis ahead of that next major upside extension towards the 140 handle, and the market is seen now putting in a longer-term cyclical bottom. Dollar yen. So dollar yen is pushed back above 111 in recent trade, and that's some key short-term resistance. If the market can establish above this level over the next 24 hours, it would suggest that we could see additional upside back towards the 114 to 115 area over the coming days. If, on the other hand, the market stalls out above 111 again and we see a reversal back below the barrier, it could expose a drop back down towards a retest of the 2017 low around 107.30. Euro Swiss. Euro Swiss has been confined to a choppy sideways trade, but overall this is classified as a bullish consolidation after the breakout that we saw earlier this year above 112. Ultimately, the market is now expected to break above 115.39, the current 2017 high, and head back up for a retest of that critical previous support from 2015, and before that at that barrier at 120, now turned resistance. Aussie dollar. So Aussie has repeatedly shown signs of being unable to hold on to gains above that 80 barrier. Most recently, we saw the market stall out by a 2017 and plus 2-year high at 81.26. We could be seeing the market now roll back over, and a break back below that 78.08 low that we saw on the 15th of August would expose a deeper drop down towards 75. Dollar CAD. Dollar CAD has been trading in a very intense downtrend in 2017 after trading up earlier this year towards 140. At this point, the market could be in the process of looking for a more significant correction out from those plus 10%, that plus 10% drop off, and if we see the market establish a break back above the 24.20 area, it will strengthen this outlook and expose a more significant upside correction towards 127.20. Only back below 120.62, the current 2017 and plus 2-year low, would negate this corrective outlook for dollar CAD. Kiwi dollar. So Kiwi has been very well capped into rally since breaking down off that plus 2-year high at 75.58. The market now is looking potentially for a lower top in the 73s, which would be confirmed on a breakdown back below 71.32, exposing a retest of the 2017 low down around the 68s. SPX 500. The S&P 500 continues with its relentless push to fresh record highs. The market now is focused on the next barrier, which comes in at 25.50 further up. Any setbacks now should be very well supported, with only a break ultimately back below 24.17 to suggest that the market is rolling over for a bearish structural shift. Initial support on a very short-term basis comes in around 24.90. Gold. So gold has seen some setbacks off the recent 2017 high, but could be now coming back for some support by that previous resistance in the 1300 area and looking to carve out a higher low ahead of a continuation of gains in 2017 up towards a retest and break of the 2016 peak at 1375. So ideally, the market should be well supported as it's in an uptrend in 2017, and only a breakdown back below the 1260 area would delay the constructive outlook for gold.